Meanwhile, the Asian markets have opened in the green early this morning after some reassuring comments from the Federal Reserve that has helped the Wall Street to rally. Although the war in Ukraine has sent the oil prices spiraling even higher, with a grim omen of the possibility of long inflation that could grip the global economy. The Western nations have tightened sanctions on Russia as Ukraine's second largest city, Kharkiv, has suffered some heavy bombardment over the course of Wednesday. The MSCI's broadest index of Asia-Pacific shares outside of Japan nudged up by about 0.4% and away from its recent 15-month low, while Japan's Nikkei is said to be trading about 1% higher, while the rush to the commodities has lifted the resource-rich Australian index by about 0.9%. And after bouncing overnight, the Standard & Poor 500 stock futures was down a fraction, while Nasdaq futures has eased with about 0.2% gains. European shares also won a reprieve from selling, although analysts at JP Morgan had a stark warning for the clients. European bonds also surrendered some of their recent hefty gains after data showed Eurozone inflation hit a record high of almost about 5.8% in the month of January, making it harder for the ECB to keep the policy super loose. The crude oil prices climbed up to the highest levels in more than a decade today, and global benchmark Brent topped the $117 per barrel after OPEC and its oil-producing allies, which include Russia, decided to hold production steady. The West Texas Intermediate crude, the U.S. oil benchmark, jumped more than 8% to trade at $113 per barrel. WION is now available in your country. Download the app now and get all the news on the move.